Steve Abisi with Kingdom Financial Solutions, and I'm here with Angela Nummy. Angela, tell us about your company.
I'm the owner of Northeast Tax and Business Solutions, and we're on the Connecticut shoreline.
And Angela, you help with tax solutions from before the tax return, correct?
Yeah, we fix problems that are old problems, whether you never filed a return or you get a notice that says you filed your return wrong, or you found yourself with unpayable tax debt. We're helping people clean up after the fact.
Offering compromises.
Installment arrangements, or just unwinding a tangly problem with a notice.
And at Kingdom Financial Solutions, we pick it up from there and we help people reduce taxes going forward. Reduce their capital gains, reduce their self-employment tax, try to get them to retire tax-free. So we're both tax preparers, but we work in totally different atmospheres.
Yeah.
So today we want to talk to you about the one big beautiful bill, what did not change. So Angela, thankfully capital gains rates did not change. They were talking with the last regime to make unrealized gains taxable. So not only would you have to pay tax on something you didn't sell, and we could get that from the brokerage statement, but everybody would have to get their house appraised every year. And they would pay tax on the appreciation of their house.
That's insane.
It was crazy. Could you imagine what that would have done to our tax offices?
No, I can't.
How would you have handled that?
I probably wouldn't have answered the phone and put an outgoing voicemail explaining to everybody what to do.
The people would have been so irate over, paying taxes on stuff they didn't even.
I know.
sell.
Can you imagine? With the economy we've been in and the way the markets have been, you're paying taxes on cash you never accessed. Like, that would be crazy.
And think about the people that didn't inherit the house, but they didn't get the stepped up basis.
Oh, no.
And now they get the house from their deceased parents, and now they have to sell it because they have a big tax bill.
Yeah.
So thankfully we don't have to deal with that. But do you see a lot of people that have huge capital gains?
Not necessarily, unless they're selling real estate.
Do you do a lot of 1031 exchanges?
I never do 1031 exchanges. Most people are looking for their cash. And the niche market that I'm serving, people want their cash. They're taking it for their retirement, or they're looking to do something else with the money from their second home or something like that. Yeah. Interesting
enough, it's very hard in this environment because of the lack of inventory to do 1031 exchanges. So there's something called the Delaware Trust. I don't know if you're familiar with that.
I'm not, but I did want to learn about that.
Yes. So the Delaware Trust is it's a real estate trust that you can 1031 exchange into, and then you can park it there until you can find another place and 1031 exchange out. But you have to be an accredited investor. You have to have over $1 million worth of assets.
Okay.
And it can't be more than, I think, 40% of your portfolio. But
Okay.
These are 1031 exchanges only work for people that don't have, it wasn't their personal property, because you can no longer.
It had to be a rental property.
Yes.
And you're seeking to move the finances from that into another rental property.
Sure.
You just aren't ready to make the buy yet?
Correct.
Okay.
Yeah. And
is it expensive? Is there fees or?
To do you have to have an intermediate lawyer.
Okay.
I'm not sure the cost on that, but you can't do a 1031 exchange on your personal property. So if you're having a gain there, it doesn't matter if you buy another piece of property, you're kind of stuck. Well, there's we have the $500,000 exclusions. So.
Yeah, it's pretty rare to come across somebody who had that much gain.
Yeah. But some other things that you can do, let's say you couldn't find, and you found a piece of property after the fact, you could do a cost segregation test as long as they're a real estate professional.
Sure.
And all that added depreciation with the bonus depreciation being at 100% could wipe out your gains.
Oh, that would be a good strategic use of the cost segregation.
Right.
Yeah. Okay.
And then
I never thought of that.
If we can't do that, one last chance is we can take some of that money and put it into a gift annuity and create a big, you get a lifetime income stream.
Yeah.
You get a big deduction on your tax return,
Mm-hmm.
and you get the charity of your choice gets to, you get to see them use the money. But the problem that lies is sometimes your standard deduction is so much higher than your itemized deductions. Like the first amount, you're just getting caught up.
Oh, yeah.
And so, but those are just some options that we can do. And then if it's a partnership that the real estate is in, and you're trying to avoid, even if you didn't sell it, there's the options to do, or we have to do the SALT pass-through. The property tax pass-through. But now last year in Connecticut, of course, in the middle of tax season, came up with
That was wild.
It was, wasn't it?
It was a crazy tax year.
They came up that it was optional. And I chose, I don't know about you, but I chose to opt out a lot of the clients because in the past you got credit for like 83.5% or whatever it was.
Yeah.
This year you only got credit for what your tax liability was. So somebody could have gotten a big refund there, but they didn't get credit for the amount.
I found that I had to weigh the difference between like that pass-through tax. If we were going to opt into the program and pay the Connecticut tax, Connecticut was going to take a cut of the action. So it was like, well, what's it going to cost me to pay Connecticut? And if I leave it on the federal return and, take it on the federal return, am I going to get at least that much tax savings? And a lot of times the answer was, it's really not actually worth it. Most of the pass-through entities I'm working with, they're small, and
Right.
they even unwittingly formed their partnerships, not realizing what they were doing at first. And so it really wasn't worth it, and I opted out for a lot of them. But if somebody had to pay, more than $10,000 in pass-through tax, we were realizing at least $2,000 of savings overall. So it ended up being worth it.
Right, so it saves you on the federal income tax,
Yeah.
but
You had to
Like I said-
really like do the math. You had to math it out,
Right.
because the standard deduction was just wiping it all away, and it actually wasn't worth it. It had to be a big dollar.
and of course they threw this on us like in the middle of March when all the businesses and
Oh, Steve, I wanted to cry. I
Yeah.
wanted to cry.
Yeah.
Yeah.
So it was hard to do an analysis at that time because you had a stack of returns still left to do.
Right. And my software processed it wrong, and it made it look like all the payments were going through, and they weren't going through.
And the one thing that got me too is you had to check the box whether you're electing it or not.
Oh, electing it,
And,
yeah.
and if you chose not to elect it and then later you found out that they made payments, it doesn't matter. It's lost.
Right.
And so that's kind of a quirk,
Yeah, it was a quirk.
Maybe Connecticut will get better.
I don't know.
It was a joke, of course.
I don't think
It's
so.
Connecticut.
It is.
So Angela, tell us if people want to get a hold of you, how can they get a hold of you?
Oh, sure. Our office, my website is NETAXAND, so that's NETaxand.com, as in Northeast Tax. And the phone number is 860-446-7033. Those are the best ways to get a hold of us. And yeah.
And if you need some tax planning, you can get hold of me at 860-490-9741 or at kingdomfinancialsolutionsct.com.